Let I start my presentation. Myself, Shanmugapriya. I am going to make a short presentation about the role of financial manager from the subject of financial management. The financial manager plays a major role in every business organization. The financial manager plays four major roles in the organization. They are raising of funds, allocation of funds, profit planning, and understanding capital markets. Before we going to the topic, must we know about who is a financial manager. Financial manager are responsible for the financial health of an organization. They produce financial reports, direct investment activities, and develop strategies and plans for the long-term financial goals of their organizations. They are called as the financial managers. Let me move the roles of financial manager. First role is raising of funds. In order to meet the obligation of a business, it is important to have enough cash and liquidity. A firm can raise funds by the way of equity and debt. It is the responsibility of a financial manager to decide the ratio between debt and equity. It is important to maintain a good balance between equity and debt, which means it was a main function of the financial managers. There are two ways to raising of funds. They are issuing shares and debentures and maintain a good balance between equity and debt. Next, allocation of funds. Once the fund are raised through different channels, the next important function is to allocate the funds. The funds should be allocated in such a manner that they are optimally used. Next, which means the next important function is to allocate the funds. There are three ways to allocating the funds for a business. They are the size of the firm and its growth capability. Next, status of assets, whether they are long-term or short-term. And finally, mode by which the funds are raised. These are the three ways to allocation of funds for the organization. Next, profit planning. Profit earning is one of the prime function of any business organization. Profit earning is most important for survival and sustenance of any organization. Profit planning refers to proper use of the profit generated by the firm, which means profit earning is one of the primary function of every business organization. Every business organization are based on the earning profit level in every financial year. Next, profit arises due to many factors such as pricing, industrial competitions, state of the economy, demand and supply, cost of output. These factors are deciding the organization's profit level. Next, understanding capital markets. Share of a company are traded on stock exchange and there is a continuous sales and purchase of securities. Hence, a clear understanding of capital market is an important function of financial manager. When a securities are traded on stock market, there involves a huge amount of risk involved. Therefore, a financial manager understands and calculates the risk involved in the trading of shares and debentures, which means understanding of capital market is an important function of a financial manager. The financial manager must to understand and know about risk involved in trading of shares and debentures in the capital market. and the financial manager as to how to distribute the profit to the investors. It was a main function of the financial manager. These four, raising of funds and allocation of funds, profit planning, and understanding capital market, these four roles are